Hello everybody and welcome back to this MBA in Marketing Management. So we're now at session 7 and in this session we'll be looking at strategic analysis, and that all forms part of the management policy and strategy module. So we will be exploring analysis in this case in terms of analysing a company's resources and competitive position. We'll be looking at the organisational capability profile, strategic advantage profile, and core competencies which make organisations have a distinct competitiveness. So we've come across Michael Porter before, and according to Michael Porter, he talks about competitive strategy in the 1996 Harvard Business Review article. And in it, he argues that competitive strategy is about being different. He adds that it means deliberately choosing a different set of activities to deliver a unique mix of value. So in short, Porter argues that strategy is about competitive position. We saw that in earlier modules looking at the different ways that an organisation can make itself competitive. And he argues that it's about differentiating yourself in the eyes of the customer, about adding value through a mix of activities different from those used by competitors. In his earlier book, Porter defines competitive strategy as a combination of the ends or goals for which the firm is striving and the means or the policies by which it is seeking to get there. Therefore, Porter seems to embrace strategy as both plan and position. And it should be noted that Porter writes about competitive strategy, not about strategy in general. So what does this mean? So the areas that we need to be aware of are identifying and assessing a firm's competitive edge and core competencies. So let's just define what we mean by that. So a competence is something an organisation is good at doing. So it results out of accumulated learning and built up proficiencies. So examples are proficiency in merchandising, working with customers, proficiency in specific technology, and proven capabilities. A core competence is a proficiently performed activity that is central to the organisation's strategy. And these are important activities in which a company is better than other internal activities. Examples could be, for example, good after-sales service or skills in manufacturing, high quality product at low cost. So a core competence is knowledge and skill based, residing in people and in companies' intellectual capital, and therefore it does not appear in the balance sheet. So when we talk about distinctive competence, which is what Porter talks about standing out, what we mean by that is a competitively valuable activity that a company performs better at than its rivals. So it is competitive superiority in performing core activity, generating a competitively superior resource strength. So a strength that is superior or distinctive to competition is what we know as competitive advantage. So what do we mean by that? So a competitive advantage is a backup for strategy without which strategy will not work. A competitive advantage finally results in either cost advantage or differentiation advantage. And that's what we saw in Porter's model. Creating an entry barrier is also a way to build up a competitive advantage. And also building a competitive advantage, it's a conscious and a long-term process. And therefore, building a competitive advantage profile for the organisation is based on an internal appraisal and an industry competition. So, as we said, we talked about what core competency is. It's an enduring competency that cannot be easily duplicated by imitation, and it lies at the root of its products. So, the way to find out what the core competencies are in an organisation are to carry out various techniques, such as a SWOT analysis, such as benchmarking exercises, value chain analysis, value to customers, so having a competitive approach, or conducting a competitive strength assessment. What is really important is to have a look at how the firm is doing by giving it an internal appraisal. So the purpose here is to know one's organisational capabilities and its strengths and its weaknesses. and therefore then be able to select the most suitable opportunities as per already appraised capabilities. To assess the capability gap for the opportunity in hand and also for the objectives and goals, this is an important purpose in the internal appraisal of the firm. Another important purpose is to be able to use the internal appraisal of the firm as a way of taking steps to elevate the capability to achieve the desired objectives and goals, and also select the product or business in which an organisation can grow as per the potentials which have been appraised. So when we're considering conducting an internal appraisal, there are some things that we need to think about or factor in. So the factors that we need to consider are things such as an assessment of the strengths and the weaknesses in different functions and areas. We also need to factor in identifying and assessing the firm's competitive edge and its core competencies, and appraising the individual business, the product lines of the firm, and the firm's know-how status. So when we're assessing strengths and weaknesses, we're really asking how well is the company's present strategy working. So this is where we can kind of break this down into three areas. So we're first of all going to be evaluating the company's competitive approach. So in order to do that, we need to compare cost effectiveness of the company's products with its rivals. So asking questions such as, are we low cost? Or does our product have distinctive features? What value for money is offered to the customers? And the perception of customers, what is it regarding our product and the company? Another thing we can do to assess the strengths and weaknesses and how well the company's present strategy is working is to look at the core competencies, the distinctive competencies, which are building blocks of strategy. They are going to give strength, and similarly, we need to resource weaknesses that make the company vulnerable and need to be corrected. So strength allows the company to take advantage of opportunities and guard against strengths. And then another thing we need to look at is understand the value chain analysis and check against that. So do we competitively manage value additions in value chain? Are we competitively stronger or weaker than our key rivals? So the main functions really are involved around checking the strategic issues that need attention from management. So it's really about conducting a gap analysis and taking actions to remedy the problems. So conducting an industry analysis and then an analysis of the competitive situation and preparing what we could call a worry list. So a good company situation analysis and good industry and competitive analysis are valuable preconditions for good strategy making. And in terms of marketing, market growth, market share of the firm and its competitors, production capacity and gap between market potential, brand equity, the product's life cycle, and estimating safe period are things that we need to think about. So what is the customer's perception for the product and what is their level of satisfaction of it? And there needs to be a synergy between product mix, prices, margins, new product capability, advertising and sales promotion. And then another area that we need to consider is conducting a marketing audit. So this is where we need to look at a market share analysis, looking at the relationship between price and volume, conducting analysis of cost, conducting a product line wise profits analysis, customer satisfaction index, brand monitoring surveys. These are all the ways in which we can get an idea of conducting a marketing audit. Then in terms of finance, in terms of profitability and productivity, analysis of assets and costs, a debt service coverage ratio analysis and efficiency of cash flow, liquidity, appreciation of long-term financial plans as per cost of capital, the adequacy of capital expenditures, tax administration, dynamism in tax planning, payback, IRR and BE analysis, earning ratios, etc. All of these are going to give us an idea of the level of financial performance. And in terms of manufacturing operations, This is where we can direct our attention at analysing the appropriateness of manufacturing processes, skills, facilities for future requirements of product trend, management in planning and manufacturing controls, operating efficiency with regard to industry standards, industrial engineering capability for improving products and methods, value engineering to simplify the product, analysing the capacity of utilisation, maintenance, breakdowns, inventory analysis, and cost of product analysis. So the main functions that we're talking about here in terms of R&D would be looking at, for example, the commitment to research and development, the nature and depth of research and development outfit, the allocation of resources, the speed of research and development, new product development, its records and adequacy, research and development and market needs, analysis of patents generated, new product commercialization, R&D expenses versus new product launch. And then when we look at allocating resources and amongst the corporate functions, some of the chief characteristics of top management need to be considered, such as is the image dynamic? Is the image come across as confident, aggressive, timid, reticent? Does it come across as change stability oriented, future oriented, coping up with future challenges, creative, realistic, innovation? What's the innovation record? How about the organizational culture and structure? Is it traditional? Is it modern? Is it rigid? Is it flexible? Is it centralized? Is it flat? How is the use of information technology? What's the quality of strategic planning? What's the turnover of executives? How is it in terms of directors? Is there a dummy director, an active director, effective policy makers? These are some of the areas that we need to look in terms of allocating resources amongst the corporate functions. And what we can see here is that we've got a difference really between organisational resources and organisational behaviour. So if we want to build up a clear understanding of the organisation's capability and its strategic advantage profile, these are two areas that we need to pay attention to. So organisational resources includes tangible, non-tangible assets, capabilities, organisational processes, technology, plant and equipments, human resources, information, knowledge, etc. And we can actually separate these resources into 4 types. So we have valuable, rare, costly to imitate, and non-substitutable will eventually lead to some kind of strategic advantage. Then when we look at organisational behaviour, this is the manifestation of forces and the influence of its internal environment. And this incorporates areas such as management philosophy, quality of leadership, shared values, culture, quality of work, work environment, climate, politics, and use of power. So organisational behaviour affects the ability of the organisation to use its resources. Or organisational resources is hardware, we could put it like that, whereas organisational behaviour is the software. So as we see here, we've split this down. So we've got organisational resources, organisational behaviour. We can then analyse that in terms of the strengths and weaknesses of both those two areas. What are the effects in terms of synergy? What are the competencies? What are the organisational capabilities? And therefore, what are its strategic advantages? So organisational capability profile and the strategic advantage profile, so OCP and ASP, if we look at the strengths and weaknesses, organisational resources and organisational behaviour creates the strengths and weaknesses. So we know that strength is an inherent capability of an organisation used to gain strategic advantage. It could be, for example, technology or finance, whereas a weakness is an inherent limitation or constraint creating strategic disadvantage. That could be, for example, layout of the organisation, machinery that's gone obsolete, location of the plant, operations which are no longer economical. So that's where we look at the strengths and weaknesses. And then if we go down into the synergistic effects, two or more attributes of strengths and weaknesses do not add up mathematically, but combine to produce a dramatic enhanced or reduced effect. So this is known as synergy or dysergy or synergy. So when product, pricing, distribution, promotion support each other, a synergistic effect will occur on marketing. So then continuing down further, we're going to look at competencies. So in terms of organisational resources and organisational behaviour, develop the strengths and weaknesses, which when combined with the synergistic effects which we just discussed, manifest themselves in terms of competencies. And this then helps organisations to withstand pressures of competition. This is an ability to compete with the rivals. Then cascading down from competencies, we have our organisational capability. And that's the inherent capacity or potential of an organisation to use its strengths and overcome weaknesses, to exploit opportunities and face threats. It is a skill for coordinating resources and putting them to productive use. Without capability, resources, even though valuable and unique, will be worthless. So organisational capability, though measurable, remains a bit of a subjective attribute. So now let's talk a little bit about strategic advantage. What do we mean by strategic advantage? So strategic advantage is the result of the organisational capabilities. And these advantages can be measured in terms of things such as profit, growth, market share. And negative results will indicate strategic disadvantages. And when compared with known identified rivals, the strategic advantage is also known as competitive advantage. In a company where there's an abundant profit, when it's abundantly making profit, competitive advantage is used as stimulus. So let's talk a little bit more about organisational capability, or OCP for short. So this is nothing but the sum total of the capabilities of various functional areas. So it's largely accepted that the main functional areas, as we've discussed in previous sessions, could be, for example, finance, marketing, operations, personnel, information and general management. And these will be different for different types of organisation. So when we talk about operations capability, we're normally talking about production of products and services and use of material resources. And with the use of material resources, there are some factors here. So we've got factors such as the production system, the location of it, the layout, the product design, the capacity of it, how the work systems operate, how much is automated. When we talk about operations and we look at control, here we're looking at areas such as production planning, material supply, cost control, quality control, inventory, procedures, standards, and the maintenance system. And then if we look at research and development or design, this incorporates areas such as facilities, product development, patent rights, technology, and collaboration. So financial capability is basically availability, usage, and management of funds. And it depends upon various factors. For example, sources of funds, such as capital structure, capital procurement, controllership, financing pattern, working capital availability, borrowing, reserves and surpluses, relations with banks and audit authorities. It also incorporates things such as the usage of funds, like capital investment, fixed asset acquisition, current assets, loans and advances, dividend distributions, relations with shareholders, and things such as the management of funds, like financial accounting and budgeting systems, management control systems, state of financial health, cash inflation, credit and risk management, cost reduction and control, and tax planning. And therefore the organisational strengths and weaknesses related to these factors is a measure of the financial capability. Then if we talk a bit more about another functional area, which is marketing, So this is basically incorporates things such as pricing, promotion, penetration, and distribution of product or service. And some of the factors in relating to the capability of marketing include the quality of the product mix, the variety of the product, differentiation, positioning and packaging. In terms of pricing, things such as pricing objectives and policies, changes to pricing, protection regarding pricing. Then if we look at marketing place, so this can incorporate factors such as transportation, logistics, marketing channels, marketing intermediaries and distribution. Promotion would be things such as tools that are used for promotion, whether that's advertising, public relations or sales promotion related. And then another marketing capability is just what we know as systemic, and that includes things such as the marketing mix, market standings, company image, marketing system, marketing management and information systems. Then if we look at the personnel capability inside an organisation to build up a good understanding of the organisation's capability profile, this is related to all the use of human resources and skills, the aspects about the ability to implement the strategies. And some of the areas that will form part of the personnel capability are areas such as the personnel system. So how is the manpower planning? What is the process around selection, development, compensation, communication, performance management systems in the sense of appraisals? What is the position of the HR department in the organisation? Another area this incorporates is the organisational characteristics. So what is the corporate image and the image as the employer, the quality of managers, the staff and workers, the working conditions and development opportunities. Another area that we need to take into account is industrial relations. So looking at things such as the union management relations, collective bargaining, safety, welfare, employee satisfaction and morale. If we then look at another functional area, which is all about information management capability, this is related to the design and management of flow of information for decision making. And this is going to include factors such as acquiring and retaining information, such as where does it come from in terms of its sources, how much, quantity, what's the quality, what's the timeliness, what's the retention, what's the security. How is information processed? So how is the use of managing databases, computer systems, software capability, and the ability to synthesize? The transmission and dissemination, so speed, scope, width, depth of coverage. And another area that's incorporated in information management capability is the IT infrastructure. So how much it's integrative, systemic and supportive. So it's what's the relevance and the compatibility to meet organisational needs. Does it need an upgrade? What's the provision of computer professionals? How much support is there from top management? And then another functional area to give us an idea of the organisational capability is to look at general management. And this relates to integration, coordination and direction of the functional capabilities. So some of the areas and factors in this area involve things such as strategic management, strategy formulation, strategy implementation, which is what we've been talking about and looking at in the last couple of modules. Things such as management information systems, machinery, corporate planning, rewards, incentives, etc. Then looking at the general managers, so their orientation, their propensity to risk, their set of values, their competency levels, their norms and their track records. And then an external relationship, so the influence and rapport with government, financial institutions and social responsibilities. And also the organisational climate. So in that we're talking about what is the culture of the organisation? What are the political processes that go on? Is there a balance of vested interests? Is there an acceptance of management of change? How is the organisation structured and controlled? So The Organisational Capability Profile, or OCP for short, can be prepared by assessing systematically those various functional areas that we just looked at, and then subjectively assigning values to the different functional capability factors. So in each one of those, everyone had a factor and the sub-factors along a scale ranging from the values -5 to +5. So if you see a capability factor rating, we can see here -5 is pretty weak. Normal, it would be 0, and a strength would be +5. So then these would be totaled up and you would get a final score. So after completing these charts for all the factors and the sub-factors mentioned, strategists can assess the weaknesses and strengths of the organisation in each of those 6 functional areas that we just looked at. So when we look at preparing what we call the Strategic Advantage Profile, or SAP for short, we need to use the Organisational Capability Profile capability rating chart, which then becomes a basis for the Strategic Advantage Profile. So we will look at each of the main functional areas which we've just discussed, and we would break them down into the advantages and disadvantages in each of those areas, and then that would be summarised and presented. So the Strategic Advantage Profile is really just providing kind of a snapshot or a picture of the more critical areas which can have a relationship to the strategic posture of the firm. So to give an example, if we were to look at, say, the area of finance, and that's one of our capability factors, and then we were to take some of the subdivisions or factors related to finance, as we saw earlier, and break that into strengths and weaknesses, we could see, that perhaps in this case, actually finance isn't one of the best areas because the high cost of capital and reserves and surplus position isn't very good. So we would actually give those a minus rating. However, if we were to look at the capability factor of operations, those in this case look like they actually score more highly because the plant and machinery is in an excellent condition, vendors are available, there's captive sources for raw material, and spare parts are available. So we would actually allocate those a plus position. So hopefully that's given you a clearer understanding of analysing strategy and the Strategic Advantage Profile and the Organisational Capability Profile. In the next session, we'll be then looking a little bit more in detail about how to analyse a company's external environment. Thank you for your attention, and I will see you in the next session.